go. Warriors, my apologies for being late, Warriors. I just got off a podcast interview, so it was running a little bit behind. Woo, all these beautiful people. Thank you, guys. Thank you. All right. Oh, there we go. I gotta grab her real quick. Oh, where'd she go? I'm trying to catch her. Boom. Ah. Boom. I'm gonna make a co-host. Boom. Okay. So I just made her a co-host. Boom. Where's Heidi? I gotta catch Heidi, make her a co-host. Boom. Heidi's a co-host. Oh, you guys are all right next to each other. Awesome. So I just made all the speaker co-hosts. You're good. I got Heidi co-host. Cool. Awesome, Morris. Thank you for your patience. If you guys don't mind, I'm going to run the bathroom real quick. I was just on an hour and a half podcast interview. I'll be right back, okay? Probably too much information, but I'll be right back.
Hey, do you guys know where if we have questions, like when Coach reads those questions at the end, where do we enter those to get them on the list?
Typically, I make a post every Monday or Tuesday, and then I copy them on Wednesday night, and then I send them to Coach. So you can either DM me, I'm under Betsy Wonder, or add the question to the post every week.
Okay, thank you, Betsy.
Mm-hmm.
I'm back. All right. All right, Warriors, thank you for your patience. Sorry about that. We had a podcast interview that ran over. Happy Friday Eve, everybody. Hopefully you guys are having a great week so far. So I'm going to go really quickly through my portfolio. So if this is your first crypto call, what I do is I go over my portfolio. I show with you my strategy. I'm going to answer the few of the questions out there, and then we're going to kick it over to our special guest. I'll do an intro for her, and then I'll kick it over. So everybody keeps asking about crypto taxes, crypto taxes. I don't know about crypto taxes. So we brought on an expert. She's actually going to be doing my taxes, and I'll give her an intro in just a moment. But I'm going to go over my portfolio first. A couple things, if you're a brand new warrior, this is your first call. A couple things I want to point out. Make sure that you check the event section. Obviously, you got there through here. The Discord, very important to check out the Discord. If you have any questions on your desktop, if you go to the members, you're going to see host. So we have a bunch of hosts there. Some of them are on here as well. So Heidi helps me with project management. You probably see Betsy somewhere in here. You have May's probably somewhere in here. There's Betsy right there. Awesome. And so we got our people that help support you through this community. We're growing very, very quickly. A couple things. We got Selman, who does technical analysis. Let me mute everybody real quick. And then you got me, Coach JB, and then you got Kevin Anytime. So we are the owners of the company. And so I'm going to jump right into it. I know I was late, and I apologize. I'm usually not late. It's just a podcast interview ran over. So let's go ahead and get it kicked off, Warriors. All right. I'm going to do the best I can. I've been having some major computer issues, but I'm not going to let that stop me. All right, Warriors. Okay, so there hasn't been a lot of changes. So if you've been in the academy for a little bit, not a lot of changes on my portfolio, but there are some things I'm going to be adding on there, and I'll be breaking that down for you guys. Okay, so I just want to share with you guys, if you're new to the academy, I want to continue to talk about the psychology of a market. So a lot of you if you're new to crypto, you got to go through a little bit of a retracement, right? Kind of scary. That's very, very normal and healthy for the crypto market. So my portfolio went down 27% from Sunday afternoon to Monday afternoon. And so one of the things I want to share with you guys is in those times, it's important not to panic, right? So in the bear market and going into the bull market as well, I always buy the fear, sell the euphoria. So I want to talk about that. So I want to bring this up to you guys because what you repeatedly do gets ingrained in your subconscious mind. What gets ingrained in your subconscious mind becomes an unconscious activity. And if I don't continue to talk about this, Warriors, some of you guys are going to get stuck in euphoria and you're going to get wrecked in the marketplace, okay? So one of the things I want to talk about is I highly recommend you watch a YouTube video I did yesterday with CryptoCito, is talking about exit strategies. Coming up with an exit strategy for yourself and understanding that that's your exit strategy and being very diligent and poignant and activating on that strategy, because I'm going to share with you what's going to happen to a lot of people. So we went through the bear market. Some of you may have gone through it with us. We went through the bear market. I actually made a lot of my money in the bear market. I was, like these little pumps, you'd come up, we go down. I was selling the euphoria, buying the fear. So when the market would crash down, I'd ride my surfboard down, I'd accumulate more. When it went up, I would scalp and I'd buy more cryptocurrency. Okay. What I believe where we're at is we're definitely in the middle of belief and thrill, right? So you have every news station is talking about Bitcoin. Elon Musk is pumping and dumping the market, talking about Dogecoin, Bitcoin. Michael Saylor from MicroStrategies, he put almost all of his assets into Bitcoin. He also had a meeting with 10,000, count it, 10,000. I thought it was 100. 10,000 CEOs were on this Zoom webinar that he did, convincing them to move their assets into Bitcoin. You have the mayor of Miami. I was just on a podcast interview with this WWE wrestler. He's in Miami. The mayor of Miami is asking to move their assets into Bitcoin. Think about that. You are right now in between belief and thrill, but you're getting a lot of FUD within the marketplace. You got Janet Yellen saying that cryptocurrency is used for illicit activities. She's in our government, right? And then you got Christine Lagarde from the European Union. Now, European Union is somebody you want to know. They are powerhouses within our economic system, and so is America, right? The European Union, she's saying that Bitcoin is used for illicit activities, very speculative asset. Of course, it's speculative, right? It has all this volatility to it. But what you're hearing is bad news is very good news. It's we're sitting in between belief and thrill. Now, where you don't want to get caught is euphoria and hanging out right here, because after euphoria, it crashes. And then you get complacency, people freak out. So what'll happen is if you get too greedy, okay, and I'll share with you guys so to give you peace of mind, you will know exactly what I'm doing. I will never hide from you. I'm not gonna be like, hey guys, I'm gonna be sneaky. I will let you know when I'm selling cryptocurrency, when I'm deciding to pull out. Right now, I'm just hodling, okay? So when it hits euphoria, warriors, when I start to feel euphoria before euphoria, now what does euphoria look like? We talked about that with CryptoCito yesterday. Euphoria looks like when everybody starts talking about it. You're at the grocery store, the clerk is talking about it, you're at the gas station, your grandma starts talking about it. That is when euphoria is hitting, and you may want to look at points and profits. Now, there's a thing called dollar cost averaging into a cryptocurrency, and there's a way to dollar cost average out of a cryptocurrency, right? So, like for example, when XRP goes to $7 to $10, I'm probably going to pull about 10 to 15%, depending on different projects and things like that. So that are sitting there that I could buy into, right? So really depending, probably 10%, around $7 to $10. And then another thing, I got a really cool feedback from CryptoCito is this was cool about connecting these markets together, these people together, is he gave me a strategy. Instead of pulling into fiat, pulling into a stable coin like DAI, okay, pulling into DAI and then staking your actual profits or your cryptocurrency, your cryptocurrency that you pulled out of the market into a stable coin and staking it for a high interest rate. As the market collapses, then you go back in. I was like, that is such a genius idea. So not only are you pulling into a stable coin, so you're not buying into fiat, which is a deflating asset, or not even an asset, a deflating dollar, right? You're putting into DAI, which is a stable coin, and then you can earn interest on the money that you're holding as you watch everybody freak out and go dump out of the market, right? Then you buy back into the cryptocurrency. So I'm going to be watching that. And I really was listening to him intently, because this is going to be a bull market like we've never seen before, because now you have retail adoption. Now you have the news talking about it nonstop. It's not just people who are experts in Bitcoin or got the whim of Bitcoin, because he was talking about the fact that he got wrecked in 2017 going into 2018. That's where he learned to not fall into euphoria, right? He has an exit strategy. I was just talking to the WWE wrestler on a podcast interview. He interviewed me and he was talking about his exit strategy. That is the smart way to invest. Have an exit strategy. Who cares what your neighbor's doing? Who cares what your best friend's doing? Who cares if they say, oh, don't buy out, it's going to go up even more? Because you're never going to time the top. You're never going to time the bottom. Technical analysis is used with, me and Selman's doing the technical analysis. It's used to give you parameters to make good conscious decisions. So we just want to make sure that you guys are working to build wealth versus just getting rich really quickly. Because if you get greedy, you're going to get wrecked in the marketplace. I also want to talk about the subconscious mind. So I repeat the same things over and over and over again, because what you repeatedly say in your subconscious mind becomes an unconscious activity. So you see me say the same things over and over again, because I want it to become an unconscious activity for you. So when you see something, you get non-emotional. Like, nope, Coach JV said over and over again, I shouldn't get emotional about this. I'm not going to buy out because of some FUD news, or my buddy heard his buddy say that, XRP is a fraud, or Dogecoin. You want to make decisions based on real world fundamentals. Okay. So I'll get off my soapbox. I got to go pretty quickly because I want to make sure I give her the biggest part of it. So my portfolio, if you've been in it for a while, hasn't changed much. It's pretty much the same. I have XRP, VET. Now remember, this is the percentage of the value of the coins, right? Okay, so this is basically the value of the coin right now. So these kind of are going back and forth. I've stacked up a little bit more XRP. Okay, so I have, this is basically based on the value, this is the currency, right? So I have Polkadot, Dogecoin, SNX, Algorand, Atom, which is Cosmos. I'm really, really getting bullish on that one. Engine, big fan of that one. ADA, CRO is kicking butt. Engine's kicking butt today, 30%. Link, BTC, you guys heard my strategy with that. I closed out a BTC to buy into a company. Ethereum, XLM, VeChain, and XRP. So you guys have access to this. Is in my in the actual Mighty Networks right now, and in the Discord under my portfolio. Okay. This was by request. People were asking me how much I held of each coin based on the amount of coins. Okay. I hold my biggest holdings in VeChain. I've been buying it since it was under a penny. I have a lot of VeChain, right? I'm not gonna tell you exactly how many coins I have, right? So you also want to, also I see, not you guys, but I'll see people on YouTube like, oh, I have 10,000 XRP. I'm like, you don't want to tell people how much. That's like showing your bank account to somebody, right? That's private information, right? So what I'm showing you guys is how much, where I'm allocated coin wise. I hold the most of VET because I was buying it since it was a penny. I have a lot of VeChain. XRP and XLM, they're almost stacked perfectly. I have a little bit more XRP than XLM right now. CRO, I started to really stack up CRO, and thank goodness I did because it exploded the other day. Dogecoin, it sounds funny, but Kev, it got me. It was like, get in there, and I got in there, and I'm going to use Dogecoin. I'm going to show you what I'm going to use it for. Engine, very excited about Engine. It's starting to grow pretty dramatically. And this is my coin. Now, these show like 0% because they're so small in comparison to how many VeChain I have. Does that make sense? So, for example, Ethereum, I'll tell you, I have 12 Ethereum right now. So that gives you an example. I have 12 Ethereum. So it's not the value of the coin. It's how many Ethereum I hold versus how many VeChain I hold. Hopefully that makes sense. So that's the allocation based on my coins. Okay, this is my stock portfolio, hasn't changed at all. Stocks are kind of getting wrecked right now. I have Tesla, 3D Metals, DM, Snapchat, Airbnb, and then ESA. That'll be IPO in, I think here about like 80 days or something like that. Okay. All right, so here's my strategy. So I'm going to go quickly because I want to get it over to taxes. That's a lot of the questions. I'm going to use Dogecoin to scalp to buy more long-term holds, XRP, XLM, and VET. I'm going to dollar cost average. So what I'm doing right now is DOT, Polkadot, SNX, Engine, and Atom. So I'm dollar cost averaging into these cryptocurrencies. So every time I get paid on Wednesdays by my companies. And so when I get paid, I split across there and I dollar cost average into these coins. Now, what is dollar cost averaging? So dollar cost averaging is somebody who is consistently buying on a weekly basis or some type of monthly basis or weekly basis. What that means is you're beating the market cycles, right? So if you have your bags built, a very powerful way to invest is dollar cost averaging, right? Just buying every single week at the same time. And what you're doing is you're beating the highs and you're beating the lows, okay? So once my bags are built, I start dollar cost averaging on a weekly basis. So every time I get paid, I pay myself first. I don't even pay my bills. I literally take a certain of my portfolio and I pay myself first. I invest in cryptocurrency, okay? Mana, Decentraland, I'm gonna start getting into NFTs. Decentraland is, Mana is the project. So it's basically buying a coin that is creating a world in the virtual world. This stuff is powerful. I'm starting to study NFTs and they're really, really a powerful thing. It's like my daughter loves Post Malone, right? She was so excited about to hear that Post Malone was doing it. He did a non-fungible token where you could play beer pong with him, which is crazy, right? And so it's just a different way. We got you remember we had garbage pail kids, you had, trading cards. It's now digital. That's basically what it is. So you may as well invest in what our kids are going to be using. Think about that. I always look at my kids. Another reason why I started to look at Mana is because my son just got into Minecraft. I'm like, okay. I like it because he's building stuff. He's using his creative mind. So I don't let him play like any fighting games but watching him do that, I'm like, that's what Decentraland is. It's basically building a world and you're going to be buying real estate in the virtual world. Okay. Crypto questions. I'm going to move through these really quickly because I want to get it over to our guest speaker. So we have, let's see here. Do you have any advice for warriors regarding taxes? Yep, she's coming up next. I understand many in the academy are in the US. However, this is going to be tough. So she'll talk about this a little bit because this is going to be mostly for America. All tax laws are different in each country. For Selman, we'll have him talk about that later. I did also, but I need more advice about buying in new projects. For example, the coin's supposed to be 0.05, but I got in at $2.50 just minutes into the sale. Are there bots for buying? Interesting. There are bots for buying, but we're going to talk about that. So Salvin is getting really deep into reading white papers, and as we become better at it, we're going to start to bring projects to you guys before they ICO or things like that. So building this community should help you with that, because we're going to someone's basically reading white papers, which is a powerful way to invest. Also, first order failed, but it still paid the gas fees. So basically paid them twice. Why the fail and why the fee's so expensive? It depends on, I just need a little more context on this question. Like what, was it Ethereum? Where did you do it at? Things like that. Just a little more context. Could we maybe, sorry to rush through these guys. I want to get over to the taxes. Could we maybe have a designated Discord for discussing exit strategies? Also real estate. Yep, we can do that in the future for sure. I'm going to build out an exit strategy for you guys on my coins, just to kind of give it. I would recommend we should go through an exit strategy exercise. Actually, we should build that out where we all build our own strategies and share them with each other, so we can kind of get an idea. Remember, your exit strategy is yours. So I'm not basing mine on anybody else. I'm basing on mine and how I'm going to build generational wealth. What are your thoughts on BAT token? I'm thinking about rebalancing away from it. So they had that breach just recently. I didn't go too deep into it. So I used to have BAT. I used to have a lot of BAT, but I sold out of it. So I sold out of BAT and Harmony to buy Bitcoin, and then I did this reallocation into a business. A BAT, I think it's a great project. I think it's great. So it's amazing. It's a better way to browse, right? But I think there's going to be more out there. So I was very bullish on BAT. I just bought out of it to buy into Bitcoin, but then they had that breach, and so I'm kind of I don't think I'm going to dollar cost average back into BAT. So yeah, I think that might be a good strategy. I'm doing the same thing. I'm staying away from BAT right now. I'm not saying it's a bad project, but it's not I'm high on my priority right now. I had something to say about that. So I'm new to staking and would like to stake Atom on Kepler. So I read this question. I don't have any experience on that. So maybe if anybody in the Discord has any experience on this, or in the Mighty Networks who post about this, I don't have any experience with Kepler. Please one day deep dive Flare Finance. Yes, I'm going to do that. People wanted NFT, so I did that. I'm going to deep dive Flare Finance because I want to learn it inside and out, because I believe it's going to be the future of our banking system. I'm trying to learn and understand the Ripple SEC stuff. If indeed Coinbase and other exchanges did in fact inquire about selling XRP on their exchanges, and the SEC did not advise them do so, could retail investors file a class action lawsuit? There's already a class action lawsuit against the SEC that was filed by, if you look up retailer SEC lawsuit, there's already a class action lawsuit suing the SEC for hurting investors. So there's one out there already, or you can start with. Can you please have a conversation around DeFi crypto? Yep, we're going to go deep into that next week. With CryptoCito, I'm going to go deep into DeFi's next week. Can you explain why gas fees and crypto neo gas? Why gas fees are and the crypto neo gas? Why there's gas fees? Because they have to mine the cryptocurrency. So gas fees are for mining. That's why Bitcoin is expensive to mine. So you have people with these supercomputers that every time you do a transaction, somebody has to retrieve and mine that transaction and then connect it on the other side. So there's basically like a miner mining for gold. And so that's why like XRP, right? It's so those are proof of work. And so it's expensive to do that, right? Ethereum is expensive to move across the rails. So that's why a lot of these crypto projects that are not proof of work are much cheaper. So that's where gas fees come from, is from mining. If we trade, sell one currency to another, same value, does that trigger capital gains? We're going to cover that right now. Would Coach please explain the process of receiving free Spark tokens that we've been hearing about? If our XRP is stored on Ledger Nano X, would we still be eligible to receive these free tokens? I think some of the cold wallets, you were able to do it. There's a process you have to go through. I have a help document that I can send out to the group in regards to this. So there's a help document that explains exactly what to do to get your Spark tokens. If you were there December 12th and you were on a qualified exchange, you don't have to do anything. They will actually be dropped into the exchange that you were on a qualified exchange when you got that snapshot. If you're talking about I think there's another airdrop coming, but I'll find that help document and I'll send it to the group. Has JB heard of CAS FX? I have not. All right, cool. So I want to get to the guest speaker warriors. So without further ado, I want to do an introduction here. Now I want to share with you guys, the reason why I'm bringing her to you is I've been vetting out tax people. So I've been working to find the right tax person. For myself personally, my taxes are becoming very complex. I own multiple companies. I have what are called K1s. I have, 2 main companies. I have sister companies that run underneath here. My taxes are going to be very complex, right? I know nothing about crypto taxes, nor do I even want to learn about crypto taxes. I want someone to handle them for me. So she's going to be coming on as my tax advisor, helping me with my personal taxes, my crypto taxes, and making sure that I stay up as we build generational wealth, right? So you always recognize a specialist in the IRS. So this is a cool thing. She's recognized as a specialist in IRS problem solving niche and won Long Island's Press Best of Long Island's 2012. In addition to becoming the U.S. tax agent, she has participated in completing live seminars and trainings across the U.S., gained specialized knowledge about the most up-to-date effective solutions for dealing with the IRS and other tax problems. In addition to helping taxpayers and their frustration and fear created by communities with the IRS, she is the author of the book, Help for IRS Problems, and the co-author of best-selling book, Protect, Defend, Proven Strategies from American Leading Attorneys to Help You Protect and Defend Your Business, Family, and Wealth. Y'all is featured in ABC, CBS, NBC, and Fox on Meet the Experts, hosted by Nick Nathan. Y'all has been frequently guest star on YNYH radio show, Giving Yourself Credit, the local TV show, and hot seat and frequent guest on the Business Talk Radio hosted by celebrity Jill Napoleon. She was also featured in over 300 media outlets, sharing her advice on overcoming adversity. Her background in tax enables her to maximize the tax savings in her clients' estate planning. So now this is her intro, but I want to share with you why I moved forward with her and why I'm going to be working with her personally, because I got a chance to talk with her for an hour and to listen to her knowledge and understanding of the tax infrastructure. I don't want to deal with taxes. I have a CFO that does all my financials. Me and Kev have a CFO. I don't buy toilet paper unless they tell me to. It's easier. I'm really good at what I do, right? And so when it comes to taxes, like, I wanted to bring on an expert, and I was vetting different people. When I talked to her, she understands the game. I always say, you understand the game, so you can't be played, right? Another thing is, not only does she do taxes, but she also can help you solve tax problems. So you're getting the best of both worlds. If you run into trouble with tax, the IRS, she knows how to solve that problem. That is like a double whammy. So I was super excited. She also has been working to understand crypto taxes, because it is the wild, wild west. It's a whole new world. And I'm really, really excited to have her on board. For me personally, and like I said, you don't have to work with her, but I'm going to build out a tax area in the actual Warrior Academy so you can ask her questions. So I'm not saying you have to go work with her for taxes and things like that. That's a personal choice for you. I personally be working with her with my taxes. Without further ado, I'm gonna go ahead and send it over. The floor is yours.
Thank you so much for that wonderful intro. I'm gonna be quick about this today. I put together a slide presentation for a very simple walkthrough of an overview of the crypto taxes. And then at the end, some of the slides are about resolution work and how to stay out of trouble with the IRS. If you just bear with me 1 second, I'm just gonna share my screen. Or at least try to, okay. Okay, can you all see that? Okay, so what's new in 2020? So the IRS requires you on your 1040 personal tax return to now check off a yes or no answer to the following question. At any time during 2020, did you receive, sell, send, or exchange, or otherwise acquire any financial interest in any virtual currency? Here's when you must answer yes. So you have to answer yes if you purchased crypto, received crypto, including if you received from an airdrop or fork, sold crypto for fiat currency, exchanged one crypto for another, or used cryptocurrency to buy goods and or services. And answering yes to this question doesn't automatically mean that you owe taxes. Okay. When can you answer no? So the new 1040 instructions clarify that you do not need to check yes to this virtual currency question if in 2020 you only held cryptocurrency in your wallets or you transferred them between wallets. Okay, so the IRS is cracking down on compliance, and it's been fairly obvious to me based on several audits of my clients' cryptocurrency transactions and the thousands of CP 2000 letters they send out. Those are like, deficiency letters, collection letters, that they're making a concerted effort to enforce cryptocurrency compliance, through their tax reporting requirements. So there are two letters that they possibly can send out to you in the mail. So IRS letter 6174, the variations are, it's a no action letter, meaning it doesn't require a response. If you have met all the crypto tax filing obligations in the letter, you have nothing to worry about. They're just simply trying to educate everyone. If you have not met all of your filing requirements, you should do so and amend any prior year tax returns that didn't include your crypto related gains and income. Now, letter 6173 is much more serious, and it definitely requires a response. And you have to respond. Deadlines with the IRS are very specific. You lose rights if you don't answer by their deadline. And if you don't answer by the deadline on this letter, you're likely to get audited. So here's some answers. If you receive letter 6173, you have some options for responding. 1, properly file the missing tax return, including your virtual currency transactions. 2, amend your prior year's tax return if you did not properly report your cryptocurrency transactions. Or 3, if you believe you filed your cryptocurrency taxes correctly, respond to them, writing, a letter of explanation at how you arrived at that. Okay. So the IRS is definitely coming after us. This past May, the IRS sent out a statement of work, letters soliciting private contractors to aid in the audits of cryptocurrency related returns. They're engaging outside contractors to assist their local revenue agents in calculating taxpayers' gains or losses as a result of these transactions. These letters went out, these statements of work went out to different companies like CryptoTrader.tax and others, asking them for assistance. And it's up to those individual crypto tax companies whether they want to work with the IRS or not. So why do we need to report? So cryptocurrencies under the US tax code are considered property. Just like other forms of property like stocks, bonds, and real estate, you'll have capital gains and capital losses on your investments when you sell, trade, or otherwise dispose of your crypto. So when do you owe taxes on your crypto? There are 4 events which trigger a taxable event from your crypto investments that requires you to report. 1, trading crypto to fiat, like the US dollar. 2, trading one crypto for another. 3, spending crypto to purchase goods or services. Or 4, earning cryptocurrency as income. So for example, crypto to fiat. So Kira buys 3,000 XRPs from Coinbase for $1,350. And 5 months later, following the lawsuit, the SEC lawsuit, she sells it for $900. That sale created a taxable event. And in this particular scenario, Kira actually has a 300, I'm sorry, my math is off, 450 loss, typo, I changed the example. So Kieran reporting this loss actually has a decrease in income, in taxable income. Crypto to crypto. Here's a perfect example. Taylor buys 5 Chainlink for $250, and after several months, the Chainlink is now worth $500. She then trades that $500 of Chainlink for 0.04 of Ether. In this example, Taylor incurs a taxable event by trading her Chainlink for Ethereum. The trade is considered a disposal, and she incurs a 250 capital gain, which she would need to report on her tax return. So it's because the Chainlink increased in value that she owes. It doesn't matter what she changed it for, there was a gain originally in the Chainlink. So that triggers the capital gain. Example 3, cryptocurrency for goods and services. So Katie owns 10 Bitcoin that she purchased at $300. And since the price of Bitcoin skyrocketed, she decides to buy a Tesla with 2 Bitcoin for $50,000. At the time she purchased the car, 1 Bitcoin is worth $25,000. So in this scenario, Katie incurs a taxable event when she disposed of the Bitcoin to buy the new Tesla. She incurs a $49,400 capital gain, and that gain needs to be reported on her tax return. Earning cryptocurrency. In certain scenarios, cryptocurrency is earned in the form of ordinary income and not capital gains. This includes cryptocurrency that's received from mining and staking and earned interest. Crypto income is reported differently on your personal tax return. It should be reported in one of two ways, either as personal or as self-employment income, depending how you're earning it. So I'll discuss where all this gets reported on your personal tax return in the next couple of slides. All right, so earning crypto would get reported on line 8, where it says other income, and you would type it in over here where it says earned income from the crypto. Alternatively, if you run a cryptocurrency mining operation, if you're self-employed and you're receiving it as a self-employed individual, either as a sole proprietor, independent contractor, member of a partnership, or you're otherwise conducting business yourself, your cryptocurrency needs to be reported on Schedule C. If you're reporting your cryptocurrency income from a home cryptocurrency business as self-employment income, you'll be entitled to certain deductions like electricity and other costs. So this is what Schedule C looks like. You'd fill it out basically, or it's something we do obviously, but you would put all of your self-employment cryptocurrency income on Schedule C. So how to report your cryptocurrency gains and losses on your taxes, on your tax return. Filing your cryptocurrency gains and losses works the same way as filing the gains and losses from investing in stocks or other forms of property. And below I've listed the 5 steps you need to follow to effectively file your cryptocurrency taxes. First, you calculate your crypto gains and losses for each coin. You would input the information on IRS Form 8949. Each transaction goes on its own line. And you would include your totals from 8949 onto Form Schedule D. And include any crypto income as an individual on Schedule 1, or again, as we talked about, Schedule C if you're engaged in business. And then you'll complete the rest of your tax return. So the information you're going to need for Form 8949 is pretty detailed. For each taxable transaction, you're going to need a description of the property you sold, so which coin, the date you originally acquired the property, the date you sold it, proceeds from the sale, and what it cost you, the cost basis of that original coin. And then you'll put your gain or loss in column H, and I'm going to show you on the next slide. This is an example of what it would look like. So you would list each individual transaction and go across. And then at the bottom of the form, you'd get your totals of whether it was gains or loss netted out. And any of these forms that I'm mentioning, you can go to irs.gov and click on their forms tab, and you can type in the form's name or number, and you can pull it up just to get a better look at it. Okay, and this is what Schedule D looks like. And then, so you'll see here, line 2 at the bottom here, totals for all transactions reported on Form 8949. And so he put all the information here. And part 1 here is short-term capital gains. And below part 1 is part 2 is for long-term capital gains. And I'll go into that in just a minute. Airdrops, the tax implications of airdrops. So for example, Uniswap tokens that you claimed from their airdrop are treated as income. This means that you're liable for income taxes on the US dollar value of the claimed airdrop. And the IRS is clear in its guidance regarding the income treatment of the airdrops. So for example, Daniel was trading on Uniswap in July 2020 and realizes he can claim 400 Uni tokens with the airdrop. At the time of claiming these tokens, a single Uni token is worth $350. He recognizes a $1,400 gain on those tokens. Depending on Daniel's marginal income tax bracket, and that'll be different for everybody depending upon what bracket you're in and how much your annual income is, he will pay a certain percentage of tax on that $1,400. So that's a little bit different than the capital gains and losses. Beware of precarious situations. So airdrops present a slightly hazardous tax situation as a result of being recognized as income at the time they are received. So for example, if you received your Uni tokens on September 15th and then saw them significantly drop in value a month later, you still owe income taxes on the dollar amount that the coins were worth on September 15th, the date of the airdrop. If the value of your tokens drop enough, you may not have enough left over to cover the taxes that were owed on that income. So proper tax planning is important in these scenarios so that you don't wind up with an income tax bill that you can't afford. How to calculate your cryptocurrency tax rates. So we have short-term versus long-term capital gains. So for those who aren't familiar, if you held your cryptocurrency for less than 1 year, the associated gains will be considered short-term. Alternatively, if you held on to the crypto for more than 1 year, your gains will be considered long-term. And as the government wants to incentivize individuals to invest for long periods of time, tax rates for long-term capital gains are lower than those for short-term. And here I'm going to have slides that show you the different rates. So for the short-term rates, you need to look at the federal income tax brackets. And so depending what your income levels are, what your filing status is, you can see the short-term capital gain rate there on the left, the different percentages. And these are in the tax tables. You can find all this on IRS's website. Long-term capital gains are treated much more favorably. So let's say if you're single, from any gains between 0 to 39,999, there's a 0% rate. Above 40,000 is 15, and then above 441,450 is 20%. And that's just for single, and you can go to whatever category you're in your filing status. DeFi crypto, analyzing lending and yield farming, liquidity pools, borrowing and earning. And this is a whole other area with tax implications beyond the scope of the time that we have to cover today. We can maybe do another Zoom call at some point on these topics, but the IRS has not yet released any direct guidance on DeFi specifically, just general guidance on cryptocurrency. So that's constantly changing. And this is a link where you can see the IRS's status on their position on the virtual currency. And don't mind that it says international taxpayers. It's just that's where they've decided to list all of these transactions. So there are several cryptocurrency tax software companies that can easily import your transactions onto Form 8949 from most exchanges if you didn't keep detailed records of every one of your transactions for a fee. And they range from $39 to a couple of $100, and it really depends upon how many transactions you've had during the tax year. And I've listed a couple of the different tax trading cryptocurrency tax softwares, and you have to really compare them all and decide which one has the automatic imports with the different currency exchange, the cryptocurrency exchanges that you've used. Some of them more than others. Some of them definitely deal with exchanges with individuals outside of the US. So you really have to check each one and see which one makes most sense for you. But once you have, imported, and then myself with my clients, if I use, sometimes I use CryptoTrader.tax, I've been able to invite my clients to import their information directly over to me, which then I can put into their tax return that I do for them. I'm just going to talk quickly about avoiding tax issues with the IRS and things that they don't tell you that you should probably know. So this year, it's estimated about 20 million people will need representation to help solve their IRS tax figures. COVID has hurt a lot of people. There have been a lot of withdrawals from their retirement accounts and taxes not paid, and they've collected unemployment and didn't withhold taxes. And that figure now is double than that of 2020. Always file your tax return on time. It's not a crime to file and owe the IRS money. It is, however, misdemeanor punishable to up to 1 year in jail if you do not file your tax return. Always file timely, and this is really important, and they're really not forthcoming about this. The IRS only has 10 years from the time the tax was assessed to actually collect the taxes owed from you. And that 10-year clock doesn't actually start ticking until you file your tax return. So if after the end of 10 years, you still have a balance with them for a return that you filed 10 years earlier, whatever is still left, they have to zero out your account. They are not legally allowed to collect your taxes past that 10-year anniversary date. If you don't file a tax return, within 2 to 3 years, the IRS will file a substitute for return, or what's called an SFR, on your behalf based on the income that was reported to them without any deductions you would be entitled to. So a lot of the times the liability established by the SFR is most often greater than the actual liability owed. And lastly, you also only have 3 years to claim a refund. So I've had clients that haven't filed in many years, and then when we catch them up, they've lost out on thousands of dollars of refunds they would have been entitled to had they filed timely. Penalties, what you should know about penalties. If your failure to file penalty is 5% per month of the unpaid tax for each month or part of a month that your return is late, and it's capped after 5 months at 25%. So if you owe $10,000 and you were late filing for 5 months, you're going to get hit with a $2,500 penalty. And if you file your return more than 60 days late, the minimum penalty right now this year is the smaller of 100% of the unpaid tax, or $435. And it applies for a full month, even if your return is filed less than 30 days, if you're 21 days late, for example. Then you also get hit with the failure to pay. If you don't pay your taxes on time, you'll get hit with this penalty, and it's half of 1% of your unpaid taxes for each month or part of a month after the due date that the taxes aren't paid. If you filed an extension and paid at least 90% of your actual tax liability by the original due date, you won't get hit with this penalty. If both the failure to file and failure to pay penalty apply in any month, the 5% failure to file penalty is reduced by the amount of the failure to pay penalty. But it's unnecessary to pay these astronomical, penalties. Just file on time. And I always have my clients try to file as early as possible because, if you file in February, beginning of March, at least you have some time until April 15th to come up with the money or figure out how you're going to pay it. There are also accuracy related penalties, and this is, important, especially in the crypto space now, since everything is really new. There are 2 types of accuracy related penalties: substantial understatement and negligence or disregard of the rules or regulations. So that includes any failure to make a reasonable attempt to comply with tax laws, exercise ordinary and reasonable care in preparation of a tax return, and to keep adequate books and records to substantiate the items properly. And section 6662 imposes an accuracy related penalty equal to 20% of the portion of an underpayment or of tax attributable to, among other things. So it's a huge penalty. It used to be if you underreport your income by at least 10% or more, now it's 20%, you're going to get hit with this penalty, and it's substantial. So lastly, what if you can't pay your taxes? So there are a bunch of different resolution options. Currently not collectible status. So that means you're suffering a hardship. If you have more expenses flowing out each month than you have income coming in, the IRS will put you in uncollectible status for around 18 to 24 months, where you don't have to worry about any collection activity, levies, liens, wage garnishments. They give you basically 18 to 24 months to, rebalance your budget and get your life in order and try to get over whatever it is hardship that you're suffering. And what's great about it is the 10-year clock against them is still ticking. So, I've had clients, I've been able to keep them in this currently not collectible 2 years, 4 years, sometimes even 6 years, to the point where, their thousands of dollars of tax liabilities get wiped out because that 10-year clock runs out. They also have short-term installment agreements where you can, if you can pay over 100, within a 180-day period. And then there's, relatively new in the last couple of years, there's streamlined installment agreements. So if you owe 100,000 or less, it used to be 50, but they've raised it in the last couple of years to 100,000. They don't require verification of your financials. So they'll give you the payment plan, no questions asked, usually 60 months, but it can be up to 84 months, but it won't go beyond the CSED period, which is that 10-year period. And it must be a direct debit or payroll deduction agreement. You also have a partial pay installment agreement based on your financials, which is great because, usually under the streamlined agreement, let's say your payment has to be, they calculate it to be $1,200 a month. Under a partial pay, when you provide your financials and it basically states that you only have $200 or $300 a month disposable income, they will have to put you into a partial pay installment agreement at that $300 a month. So that's a great alternative, because if you can stay and not default that agreement, when that 10-year statute is up, if you still owe money, gets wiped out. There's full pay installment agreement, over the 10-year period. And then lastly, the offer and compromise. Now, there's only about 20% of offers filed are actually accepted. The worse your financial situation, the better offer you'll get. And basically, an offer and compromise is when you settle, your $50,000 tax debt for, let's say, $10,000 or $500. I mean, one of my best offers, my client owed over 500,000 and the IRS took $500 to settle that 500,000 liability. So if your financials substantiate what you're putting in on the form and on the offer, the IRS has an obligation to accept what you can financially pay them to settle your tax debt. So lastly, how to contact me. This is all my contact information. If you'd like to send me an email, or Coach, if you're going to put something in the online in the group, but I'm always happy to work with clients in the space, in this group. And if you have any questions, please feel free to send me an email. Just remember, I'm in the midst of tax season right now, working 16-hour days to get my clients' returns done. So just give me at least 24 hours, to get back to you. But email is probably the best way to reach me during tax season, especially. And that's it.
Awesome. Yeah. So what I'm going to do, Awards, I'm going to take this presentation and I'm going to put it into the Mighty Networks in the courses area. And then so I'll put a tax section in there. So I have a tax video from a YouTube video, and I'm going to take that out. I'll put this one in there as well. And then all of her contact information as well. Like I said, I'm going to be using her for my personal taxes and as we grow. So there was an interesting message that I got yesterday on Instagram. And so the thing is, taxes are unavoidable, right? And so a gentleman messaged me, goes, I'm not getting into crypto because if I make a ton of money, I'm gonna have to pay all these taxes. And I'm like, it's a weird way to think, right? So if you made $1 million, you paid $450,000 in taxes, you still have $650,000 left. It's like, wouldn't you want to make that appreciation, right? But also too, what we're going to work to do is my business partner, so my CFO, is really good at understanding business and why owning a business is really important, right? That helps. We get what's called a K1. And so she was helping me walk through this. When I get a K1, we're obviously going to take some losses from last year in regards to what happened with the pandemic and things like that. So those things help you with tax deductions, but I'm not a tax expert. So that's why I'm bringing on a tax expert as my taxes got more complex. So I'm going to caution, I'm going to open up for questions. We'll do the best we can to answer. Are you okay answering some questions?
Yeah, I mean,
Okay.
I may not always know the answer on the spot, but if it's a question I don't know the answer on the spot, I'm happy to just, research it and get back to whoever question it is. So let's see what we got.
Yeah, we'll do the best. Let's do Selman. You said you had just a little bit to cover, right?
Yes, but all I can say is every Friday at 1 p.m. Eastern time, I'm doing that Zoom call where I actually cover all these technical aspects, etc. So that we don't spend so much time on this Zoom call talking about technical analysis. Perfect. Okay, so we'll be doing, and we'll get that out to you guys. We'll make sure it's sent out in Discord and Mighty Networks. And then also too, I'm learning leverage trading right now. So I actually had 2 good days of leverage trading. Then I got wrecked yesterday, but I want to learn it to the T. And then what I'll start doing is when I am leverage trading a couple times, I'll actually do a live Zoom and I'll send it out to you guys and show you guys my screen. Unfortunately, I guess on YouTube, you can't do, nor would I want to be showing people what I'm doing on YouTube. I want to show the Warrior Academy, but I'll do like live Zooms and show you guys, because the biggest thing for me was conceptually, physically seeing it, like putting in the trade, doing the leverage, how do you set a stop loss? And so me, I'm a visual, I have to see it. Like Selman was teaching me, and then Jackie came and sat right next to me and helped me do it. And now once you get into it, it's pretty smooth. And I use something called Market Cipher, which is super accurate. So those are things that we'll continue to add to the Academy, but I don't want to teach something until I know it, but we can learn and grow together. Like I said, I built all my portfolio in the bear market just by, I called it scalping. That's not the right word. I was basically buying the euphoria or selling the euphoria and buying the fear every single for almost a year straight. And that's how I built 6 figures in 6 months. And then I built from there. And so it's cool to rightfully say that, like in 6 months, I built a 6-figure portfolio just by doing that. And now I'm strategically doing it by leverage trading. And what I'm excited about is actually the bull market to me is scarier than the bear market. I like the bear market better. It's just so there's so much, it's like anxiety, right? And so what I want to do is help teach you guys as we go into the bear market, how do we sustain this for the next 3 years, build that
nice foundation. Then we go into the massive bull market. I believe 2025 is going to be huge. But anyways, so let's open it up. Any questions? Oh, okay. So we got, I'm going to unmute you guys as we go along. We got B. I'm going to unmute B. The floor is yours.
Hey, how's it going, guys? My only question in this is, I use Crypto Trader Tax, and I think they came out with some. It did like all of the grunt work for me.
Yeah.
And I passed that off to my accountant. I just am a little concerned that it maybe didn't calculate crypto to crypto transactions or something. It's just a fear of mine. I don't know if it's relevant or not.
You know, I'll tell you, I used Crypto Trader myself this season. They've got decent customer service. I was having an issue as well because, you know, I'm in New York, which is the worst state for crypto. So for me, I can only trade on Coinbase and Qcoin, and I had Uniswap. So thankfully they import from all three. I did have a handful of transactions with CoinSwitch, and they don't support CoinSwitch, and I had to put them in manually, and somehow it created like a negative balance on one of them. So I'm still trying to work out that issue. Like apparently they're telling me there wasn't enough Bitcoin for whatever transactions that are listed, but those are the only exchanges I can use in New York. So I may do as I say, not as I do. I may just take out that one transaction and not report it because it's too much of a headache to try to figure it all out. And, you know, the IRS is, you know, as long as you're reporting everything and you're doing it correctly and you don't give them a reason to audit you, you'll be fine. But as long as they've imported all the transactions, you know, if you know what transactions you've had and you can sort of compare them. I mean, what I try to do is I kind of keep a book like this, and every time I buy a coin from Coinbase or whatever it is, I'll keep a manual. I'll write it down, what price, what I bought, whatever, just to compare. So I have a point of reference. And it's like you know, the IRS is really huge on organization and records. So just for example, I had a client who came in with a shopping bag full of papers. They picked a few out and they found errors or something that wasn't quite right. They went through every single piece of paper. In comparison, I had another client who's definitely OCD and well organized. She came with a binder. Every transaction had its own page, whatever. They checked a couple, they matched perfectly. The IRS said, okay, you seem to have done the right thing. End of audit. You know, so it can go either which way. It depends on the auditor. Records are the biggest thing. You know, you don't want them finding a mistake, because the minute they find that first mistake, they're going to look through everything. But just compare what came down on, you know, Crypto Trader tax. And I would suggest, you know, I know a lot of people said sign up on all different exchanges because now there are waiting lists. And so as long as you have accounts on all of them, I really like to just trade. And I think it's been helpful that New York only allows me on a certain exchanges, because this way I'm not tracking a million different transactions all over the place, because it's going to be that much harder to do your taxes. So if you can do most of your trading on one or two exchanges and just import that data, you'll save yourself a huge headache.
Head over to Rebecca. I'm going to go ahead and ask to unmute you.
Hi, thank you so much. That was super helpful. This sort of kind of crosses over to B's question, but are we fully responsible to report everything, or can we, or is like crypto.com sending forms information directly to the IRS? Because it's like a lot to track. I guess this is what these third-party apps are for.
You are ultimately responsible for the tax return that you sign. So read between the lines, right? You know, I don't know, I have to research more whether they're actually issuing any sort of 1099s to the IRS. This is all very new. But you are required to, you're signing under the penalties of perjury that this is your return, this is your income, these are your transactions. And you need to compare what's been imported onto the 8949 by CryptoTrader.tax or any of the others, and make sure they match, because ultimately they're not responsible, you are. You're the one signing off on the return.
Okay, thank you. So we really have to track everything, every transaction. Oh my God, that's so much. Okay.
Yeah, it's very overwhelming, especially if you're sort of day trading, right? If you know, I'm one of those hodlers. I just buy and hold on for dear life for the long term. I don't do a ton of, day trading, except, I jumped on the Doge train a couple of times just to be able to take that money and buy others at the time. But I specifically don't do a ton of day trades because I know the nightmare that it will be to just import all those transactions and ultimately be responsible for what you're signing.
I got a question about that. So then I'm going to go to Sam next. And just raise your hand in the group, and it works perfectly because I can just unmute you. So like, for example, day trading, do the apps pick up the day trading, or is it?
The tax software apps will import every transaction that's in your Coinbase account, that's in a Qcoin, that's in Uphold, Bitrue, whichever ones they work with. I did find, I think when I was looking, I think Coinly, they had not only the exchanges, but they had connections to the wallets, like Jack's wallet that I use and other wallets. So you could import, but I started to feel very overwhelmed with Coinly trying to, a lot of the different cryptos that I hold, you can't, I have some on the Nano ledger, but I have some in Jack's wallet, and then some of them are in my Ether wallet, and, VeChain is in its own wallet, and, Cardano I have in their Daedalus wallet, and Blockstacks has their, so it starts to get really overwhelming if you're going to connect all your wallets with all the transactions. I think if either way, when you're going in and out of your wallet, you're coming to and from an exchange. Yeah. So I think it should be enough, all your trades, the actual selling of the coins, or the purchasing of the coins and selling and exchanging, all the transactions should be there within the exchanges. I'm not sure it's 100% necessary to connect your wallets, import the data from the wallets. Maybe it's a belt and suspenders kind of thing, for the software to match up, so you don't have like that negative balance like I did on that one transaction. But I think it's just better to stay within one or two exchanges, because otherwise, let's say I have a friend that bought Link and he can't remember where the hell he bought this $100 worth of Link, a year or two ago, and now it's substantially worth more and he can't find it, so I think you're safer sticking to one or two exchanges, then you don't lose track, or at least keep track in a book. I bought, I'll write, I bought $100 worth of Bitcoin on Coinbase on this date for, just to keep accurate records so that you can, track your transactions.
We'll go to Sam next. I'm going to unmute you, Sam.
Okay. Any tax loopholes or tax mitigation advice, please?
What kind of loopholes are we talking here? I mean,
specific to crypto.
It's still such a very new field, so we're still, researching different ideas. In terms of tax planning is huge, and I work with another accountant friend of mine who's helps those with large gains avoid paying taxes by taking some of those gains and putting them into certain investments like solar and other credits to help mitigate that. But it's worth doing if you have substantial gains. But there are other tax planning tools, especially I think Coach, you've talked about this, just if you can somehow own your own business, there's a lot of write-offs that you have, and better to be incorporated than a Schedule C. A Schedule C is more highly audited, and especially the most highly audited is the home office deduction. But if you're incorporated and working out of your home, your business can pay rent. You're not taking the home office deduction. There are a lot of things I write off, in my business, my car insurance, cell phone bills, internet, utility, a ton of stuff, so that your paycheck that you end up with, you can pay yourself more and invest more, because a lot of, the expenses that maybe you'd be using your paycheck to pay are being written off as business expenses. So
would you recommend to incorporate S Corp if you're self-employed?
Absolutely.
Yeah. Okay.
Absolutely. The difference between the two, you're as a Schedule C, you're getting killed on self-employment tax. You're paying 15%, the entire self-employment tax. As a Schedule C, the corporation will pay a certain percentage, but you're what you're paying is only half the amount. And as well, when you take, after the first 2 years of being incorporated as an S Corp, the first 2 years, you don't have to take a salary because they figure it's your blood, sweat, and tears, building up the business, and they expect losses. But by the third year, you have to take reasonable compensation for a salary. And then you're also entitled in an S Corp to take what's called distributions. So you're taking shareholder distributions, profit out of that business. And those distributions are not taxed with FICA. So, you're getting that money net of FICA, and you don't get that benefit as a Schedule C sole proprietor.
So if I can just hog a little bit more time, for example, in real estate investment, you create a company, you register everything under a company, and you trade from that company, hence mitigating all of your tax expenses. Can you do that on crypto? Can you create a crypto only trading company, trade it from that company, and then get taxed as a company? Is that possible?
Well, I would say potentially I would double check that again, because the crypto space is so new. But if you're creating somewhat of an investment, company, it may be possible in that scenario. There are just some regulations depending where you are. You have to check about investments and whether you're trading and being in compliance with, SEC and other regulations for being an investment financial business. That's a whole other thing that would need to be researched.
Good question, Sam. Let's go over to Rinky. You're next.
Sorry, I had to find the unmute button. Oh, hello, everybody. Hello, ma'am. So I got a quick question. So, oh crap, one blank. Okay, so now, in my understanding, what I just heard from, I think his name was Sam, that you can use your where you can create a possible company, but you also said there's also some research you might have to do about that. Can you also put your crypto into a trust or a self-directed IRA so that you could also mitigate from the from paying capital gains tax?
That I'm going to have to look into as well, because one of my clients asked me that the other day. So I am going to research that, because even myself, I have a SEP IRA for the business and individual IRAs, and we have to see if you can, if the exchanges allow you to open up the account titled and owned by the IRA, as opposed to an individual, which is part of the KYC, right? Know your client. So that's a relatively new area that we need to look into to see if these exchanges will allow us to open up these kinds of IRA and retirement accounts and trusts.
Alrighty, and one more question, if you don't mind. Now, I do have an S Corp myself, and I've had it maybe just a little more than 3 years. And of course, it hasn't really yielded me much. Will the IRS still be expecting some kind of return after that 3-year mark?
You definitely have to be at least on salary, but after the second or third year, if you're generating losses year after year, the IRS's position is, why are you operating a business that's not making any money? You're opening a business to actually earn profit. And if in 3 years in a row you're reporting losses, how much longer are they going to let you go claiming losses? They're going to wonder, why are you operating this business? I mean, it doesn't make financial sense to operate a business that's not profitable.
That makes sense. Awesome. Thank you, ma'am. I appreciate it.
Welcome. And one other point with S Corps, whatever reasonable salary you take, compensation, you must make sure that your distributions that you take are always less than your annual salary. Otherwise, the IRS will think that you're evading payroll taxes by paying yourself less and just getting money out as, in more profit, and you're not paying payroll taxes on that money. So if you're going to take $60,000 in salary, you could take $30,000, $35,000, $40,000 in distributions. As long as that $60,000 salary is considered reasonable compensation for your job description, your title. You can't have a doctor only paying themselves, $25,000 a year, So, and there are companies out there that you can pay to determine and do research for what's reasonable compensation. for whatever that profession or whatever that position is.
We're gonna head over to
Alrighty.
Luis. Luis? Luis, the floor is yours.
Yep. Hi. Can you guys hear me?
Yep.
Yeah, we got
Okay. No, I just have a really quick question about. So if I transfer all my coins from a wallet, I mean, from my, for example, for an Uphold or Coinbase to my Nano S, is that also a taxable event?
No, transferring it from the exchange to a wallet is not.
Mhm.
It's not a taxable event. And you can go from wallet to wallet. It's just if there's a gain or a loss that's created, that's considered a taxable event. But just moving it from the exchange to a wallet or wallet to wallet is not.
Right. And then if I hold those coins for a long period of time, but I didn't, buy any asset, any other goods or services with that, is that still taxable or no?
Yeah, if you, let's say you bought Bitcoin at 10,000 and then it went up to 50,000 and then you bought something like a Tesla for 50,000, you're going to pay on the gain between what you paid for the Bitcoin and what you exchanged for that service.
But if I just huddle onto it, that's not taxable at
Yes.
all.
It's not a taxable event until you collect the profit, until
Okay.
you cash out of it. So
Okay.
it could be 10 years, 15 years before you actually pay the gain.
Okay, but it is still, so I still have to report that into my tax form that I.
No, that you purchased, no. It's
Okay.
just the transaction of either selling it or exchanging it.
Okay, sounds good. Thank you. Thank you for clarifying.
All right, we're heading over to ProPilot. ProPilot. Just unmute your.
Okay, along the same lines where Sam is going down the same rabbit hole. You did mention earlier mining and staking, and you can set up maybe like an S Corp or something like that where you can get yourself in position where you're, saving money on taxes and you're self-employed, yada, yada, yada.
Yeah.
And also, the other thing that I wanted to mention is I am in the process of doing self-directed IRA and rolling some money over. There are 2 companies that are available out there that do it just with crypto. The thing that you have to do is you have to make sure that you have it's not really a guardian, it's like a company that is the stakeholder or something. I'm not really catching the word, but I know it's there. But
Yeah.
anyway,
Was that iTrust?
yes, yeah, it is. So on staking and mining, or in some other area, can we set up an S corporation? And I'll let you go with that. Thanks.
Just staking in mind, if you're mining, as a business.
Yes.
Yeah. I mean, if that's the business, if you're self-employed, if you're self-employed and you want to incorporate, you obviously have to check the formation laws in your state regarding being able to form that kind of corporation for that purpose. Here in New York, every time I incorporate, I form a company for my clients, they ask, what is the nature of the business that's being conducted? And then it's got to be for an allowed purpose under state law, so given New York's, failure to really embrace crypto just yet, it's more difficult. You may be in a more favorable state, but you definitely have to check. You can check with a formation company or with the Department of State in your state where you want to incorporate to see if that's an allowable purpose for a corporation in your state. I would start there. Yeah.
All right, we're gonna go to Kelly next. Kelly.
Oh. Hello, how are you?
No, good. I feel like I'm in the hot seat.
Well, I guess everybody's asking pretty tough questions. I had actually a question about state tax. So just for an example, everybody's talking about corporations, business license, stuff like that. If we set up a corporation business license locally in our state, do we need to report, crypto earnings every quarter and pay taxes on them per state? Does that make sense? My question I asked?
Not quite. So are you
Let
talking?
may I repeat that in a different way?
Yeah, absolutely.
Okay, so I had a business where I had a professional prepare my taxes at the end of the year.
Yeah.
But I didn't pay quarterly taxes to the state.
Are you meaning estimated taxes throughout the year? Estimated taxes, or what kind of taxes? Because the only taxes that are paid quarterly are either payroll taxes or sales tax. And then for individuals, you'll pay estimated taxes throughout the year. You know, if you owed a balance, let's say in 2019, then you were required to make estimated payments in 2020.
Okay.
Based on your balance from the prior year, so that you're less likely to owe April 15th when you file this year.
Yeah.
If you don't have a balance due, if you generated a refund, then there's no requirement for you to make estimated payments throughout the year.
Okay, that explains that. All right, thank you very much.
Okay.
Awesome. We got John. John, floor is yours.
Yeah, what up, Coach? Hey,
Hi, John.
I just want to say, first of all, thank you to the accountant for giving your time and sharing with us Warriors today. So first of all, thank you for that. My question is in regards to iTrust Capital. You had mentioned something there. I'm actually in the process of opening up a Roth IRA with them, because I was thinking as my funds grow in there, they would be completely tax-free. So I'm just going to roll over a former employee 401k plan that I have into it. But you said something there that caught me. So you said they have to be a custodian or something, or like, are we safe with doing that with iTrust Capital, or are they not legit for doing a self-directed IRA?
No, they're on my list to actually research, because I'm interested in myself. So maybe we can circle back in another call after I research them more. I did it, ironically, I brought it up, and it came up because I had seen it in the Discord and I'd been hearing about it. And I actually contacted my family's longtime broker, who's got my Roth IRA and IRAs. And with what's coming, which I think is an eventual crash in the market like we've never seen before, that will take a long time to recover from, just my opinion. I don't really want to leave my Roth IRA and my IRA in fiat, in the stock market. I would love to roll it over into, a Roth IRA, IRA in the crypto market. So she brought it up to me yesterday that, they'd have to be able to, the account would have to be held in the name of the IRA, not your individual name. And so that led me to, sort of go down the rabbit hole of like, can we open up, exchange accounts, in the name of the IRA, so that the IRA can trade cryptocurrency? Has that been created yet? And if not, how does iTrust Capital work? I'm definitely going to research it. So I'll circle back, with you guys and maybe post something when I figure that out, find out a way, because I think there's got to be a way at this point, as mass adoption is coming, to be able to, have the choice of putting your retirement into, either the stock market or cryptos.
But aren't IRAs typically, as you do a self-directed IRA, aren't they typically in our names?
Yes. Yeah. But like for the money that's already in the account, like the money that you already have in your IRA, you can't take it out unless you roll it over, otherwise you'll get hit with, tax liabilities and penalties for taking it out. So the question is, can you roll over into iTrust Capital? And with iTrust Capital, how does it work for you having the ability to purchase the cryptos through iTrust Capital? I don't really know enough about it to speak on it, but I'm definitely going to research it further for us and get more in-depth information, because, I would love to invest my current retirement accounts in the crypto world instead of the stock market.
Yeah, I'm in the middle of setting this up with them right now. Actually, I didn't do the rollover yet, but I was just going to do it today. Is there some questions that would make sense that do you want me to ask them while I'm doing that?
I can't think of it offhand.
Okay.
Just how seamlessly, is the rollover. As long as you don't, you can cash out, like in my IRA, I can cash out the mutual funds and stock positions. And as long as it stays in cash in the account, there's no taxable event. So as long as you can, sell out the stock positions and then take that cash and roll over the account seamlessly, then it shouldn't trigger any sort of taxable event. But I'd like to know how we can go about purchasing crypto within that iTrust.
Well, when I set up my iTrust account with them, the account's set up in your name, and then they give you an account number, and literally right on your account is their trading platform, and all the cryptos that they offer, as well as gold and silver, are literally right there, and you literally buy them, and they stay in your account, and when you sell them, then they go into an FDIC insured, covered, with a bank.
But do you own them? Do you own your keys? You're leaving these cryptos in the exchanges, or
Yeah, I guess yeah, they use, no, they put it, so when you buy it, they put it in a Curve. It's called a Curve wallet. I guess the Curve wallet covers that, but sounds like there's some more work to be done here. So would definitely love to appreciate your, anything you could do here to help us. Cause I think everybody has the same concern as, hey, hopefully, thanks to Coach, we're all going to make a ton of generational wealth here, but why give it to the government, right? And if we can grow it all in a Roth, I think that would be awesome. So it'd be great, anything you could do to help us learn on that. Thank you.
Just remember, the Roth has, income limits. So
yeah,
once you start, you think about when you're tax planning and you're doing your tax returns and you've got all these capital gains from your day trades of crypto, if it throws your adjusted gross income over the Roth threshold, you don't want to have to withdraw or, get penalized for, putting into a Roth when it, really belonged in a traditional IRA. So you got to be, very cognizant of those thresholds, whether, there are different thresholds for married and single, and just, make sure you look into your particular situation, what your threshold is, so that you don't run into that issue.
Yeah, actually, I did run into that issue. So I did look into that, and I guess maybe for the benefit of other warriors, I'll just say that what I did learn was, so I can't contribute to it anymore because I'm over the threshold, but I'm able to actually roll over an existing IRA into this one. So at least I can play with that money in there. And then on iTrust Capital, it's pretty cool. They actually show you a backdoor way of how to actually make a contribution to it, which they say is legal. So it'd be interesting to get your take on that too, for folks who are over the threshold. They do come up with, they call it a backdoor IRA Roth conversion rollover. And it's a way you can, I won't explain it here. People can go read it on their website, but I am curious. So again, I think this would be a great area we could certainly all use your help on making sure we don't go down the wrong path.
And the other thing you can be aware of is, maybe you're not aware of, is that in a Roth IRA, you can withdraw without tax or penalty your original contributions, just not the gains. The gains you need to, wait till you're 59 and a half. But right now I'm going to be withdrawing some of my original contributions to my Roth so I can put it into the crypto, because it's not really doing too much sitting in the account in the shares that it's in. So you can't do that with the traditional. You can only do that with the Roth.
Oh, that's interesting. And I was told I also have to pay taxes on the amount that I'm rolling in because I'm taking out of a traditional and going into a Roth. So I am going to have a one-time taxable event.
Yeah.
But I'd much rather pay taxes on that now than what it's going to grow to, thanks to the coach. So, yeah, anything you could do to help us just understand if this is legit and we're doing it right? Because literally I was going to roll the money over today, and now I'm thinking, oh, maybe I better wait.
I'll do some more research. And then for those of us who are thinking about eventually leaving the country, with our millions, just be aware you would have to avoid any sort of U.S. taxes. Of course, they have an exit tax, by the way, if you decide to leave this country. Uncle Sam. You need to be aware that as long as you retain your U.S. citizenship, you are required, no matter where you live, no matter what country, to file a US tax return for any income you earned anywhere around the world. You have to disclose it to the IRS. And you specifically have, there's an FBAR form, a foreign bank account, that you have to disclose any money you have in a foreign bank account. So really the only way to eliminate that, and there's been double the amounts from prior years to now currently in this year who are expatriating and giving up their US citizenship and going to live abroad. And I know we have a tendency to think that, you know, United States is the greatest place, but if you've done any sort of traveling and, you know, lived abroad at all like I have, you'd be surprised how well you can live in other countries for very little money. So if, you know, once you make this generational wealth, before you make too much of it, you know, maybe something you ultimately want to consider in terms of taxes, you know. And there is one guy that I follow, the Nomad Capitalist on YouTube. That's his company. He helps people plan to exit and find the best place and, you know, citizenship and whatever, you know, if that's something you intend to do, you know. So, I mean, I have dual citizenship with the EU, but it's just something to, you know, if things go badly here, you know, you could always go somewhere else with your money. And that's why, you know, you see a lot of these billionaires, you know, having properties in New Zealand and other, you know, Argentina, Ecuador, other places, just to evade, you know, some of the crazy taxes, you know, that you hear, because just moving overseas doesn't, you know, absolve you of your responsibility of filing a tax return and Uncle Sam getting their piece.
Yep. Awesome. Thank you. All right. Well, we'll look forward to hearing more from you on this whole Roth and IRA.
Yeah.
iTrust Capital stuff.
Yeah.
And I'll look in, I'll reach out to see if I can reach out to iTrust Capital and see if we can get a speaker to come talk to us. I think that would help a lot.
Cool.
That would be great.
Awesome.
Yeah, and they come highly recommended from I love the digital asset investor. The guy's amazing because his father got him into it, and he recommends iTrust Capital. But I've heard a lot of great things about him, so I'll see if I can find a representative to come speak to us.
That'd be great. Thank you, Coach.
So if anybody else has any question, you just raise your hand. So I feel like we're in the education. So raise your hand, please. Do not speak out of school. We're breaking free from that. You don't have to raise your hand. All right, Warriors. Well, I know I don't want to keep you guys too long. We're about an hour and a half in. This call is recorded, so I'll send it out to all of you guys. Yes, go ahead. Is that Paul?
So as far as like IRAs go, I know they have like yearly contribution limits. I was like looking it up a couple of years ago on self-directed IRAs, and I get kind of confused on it because I know with traditional IRAs, Roth IRAs, there's limits, but are there any IRAs you can do that don't have limits?
They all have limits, but one of the perk of owning your own business, like an S corp, is that you can start a SEP.
I do.
Yeah, you can open up a SEP IRA, and the limits are much, much, much higher.
I have a simple IRA, but I think just because of my employees, a SEP IRA does.
You're cutting out, Paul.
Yeah.
SEP, then I would have to pay my employees just the same amount that I pay myself.
Yeah.
Right.
Yeah.
Are there any other? I thought there was like a self-directed IRA that you didn't have to have a corporation for, where you could. There was just no limits or much higher limits. But is that crazy talk?
Yeah, I'm not really sure. You know, you'd have to ask a financial advisor that works with the retirement plans.
Probably wrong.
Yeah, I'm a tax attorney, so that's my niche. So I don't really feel comfortable speaking outside of that. But definitely, there are, you know, the corporate plans that have much higher income limits than just your individual IRAs and, you know, your $6,000 contributions.
And then if you have like a simple IRA or a SEP IRA, are those available for the backdoor options into the Roth? Or is that just a traditional?
I'm not 100% positive. Again, you know, the rules with the IRAs are much more in line with speaking to financial advisors who set them up, you know.
Okay. I asked my accountant who doesn't seem to doesn't know much about it. So
yeah.
Some more research
Yeah, I mean, I can, you know, I have on my team a financial advisor. I can certainly pose the question
Great.
about that. You know, what are the different options for, like, are you're incorporated?
Yeah, yeah. Two
Okay.
corporations, three corporations.
Busy man. Okay. Yeah, I mean, I can certainly ask him what the different options are and which plans have the highest contribution rates, if that's helpful.
That would be great. I'd appreciate that.
Okay.
So I've got a quick question. Do you have a recommendation for somebody that can help, an accountant that can help us in Utah, or are you accepting new clients that can help us? Because I know like my taxes are getting more complex than just me being able to do them on TurboTax or on H&R Block. Do you have recommendations for people based off of the state they're in, or are you
No,
accepting clients?
I am accepting new clients, and I actually can do I have the professional software, so I can do the taxes for, you know, all the states that require state filings. So it wouldn't be an issue to help you in Utah. You know, if that's something you'd like, you know, we can certainly talk about it. You have my contact information. We can, you know, talk more about it and see if it works for you.
Great. I will be in touch.
Okay.
What I'll do, guys, after we jump off, I'll actually, in the course area, I'll put a specific, it'll say crypto taxes, and then I'll take out that YouTube video I have in there. I'll replace it with this one. I'll send this out to everybody, and I'll put her contact information underneath the YouTube video. And also, one thing I asked too, because we'll post the YouTube video unlisted, just please don't send this out to people outside the academy. So I want to keep this private. Awesome. I think that's any other questions. We don't want to leave anybody out.
Yeah, and if any, you know, if you want me to share the Google slide presentation.
Oh, yes, please.
I'll send you the link, I guess, and it's, whoever has the link can just click on it and go through, you know, all the slides again if, you know, if they need it.
Yep, I'll put that right underneath the YouTube video. You can click it and download it. Yay. Awesome. Warriors. Well, appreciate you guys. So what I'll do is some notes that I took, some parking lot things, is I'll work to try to get a hold of iTrust Capital, see if I can get a speaker to come to one of our calls. A couple things coming up. Once I get leverage trading down, I'm learning from Selman and Jackie. I will do some leverage trading live with you guys on a Zoom call. I'm not going to post on YouTube. And then we'll learn that stuff together. So I think I'm more of a visual learner. I like to see things physically. And I gotta go figure out my taxes. No, I'm just kidding. So that's what I got you for. Awesome. Well, I appreciate you guys. Love you guys very, very much. I'm so grateful to every single one of you guys. Remember, if you have any issues, we have our customer service line. The customer service line is designed for account stuff. Any information, like if you need to cancel or you need to talk to us about anything outside of crypto or the mindset part of it. Appreciate you guys. As we always say, Warriors rise. Have a great day, everybody.